With April 18th less than a couple of weeks away, most people are scrambling now to file their tax returns and get their stuff ready.
You're telling everything about me. That's what I'm doing right now. Well, joining us live is certified tax coach Dominique Molina with tips on how to lower your tax bills. And she has legitimate deductions that you probably don't even know about. Thank you so much for joining us.
You're welcome. Thanks for having me.
And the operative word being legitimate deductions, right?
Absolutely. There's plenty of ways that you could legally reduce your tax bill.
Well, tell us about some.
Sure. Well, first of all, now is the time. It's crunch time. April 18th is just days away. So you want to make sure you're not missing out on any last minute opportunities to still save for 2010. So for example, there's only a handful of things that you can still do to sort of go back in time. And IRA contributions are one of those. So examine if you have the opportunity to make a deposit to fund your retirement account, you get a deduction for that from last year, even though it's now 2011. But be careful with this, because if you anticipate your taxes to be higher in the future, you could be trading a nice low rate today for a higher one. So you want to be careful and do that analysis and make sure you're not just nearsighted in reducing your tax bill.
Interesting.
Also, I think there are a lot of people who are kind of up in the air because the legislature was fighting over the Bush tax cuts and were they going to pass it and were they not going to pass it. So everything was about to change and then it didn't change. And
yeah, it certainly keeps us as professionals on our toes.
Yeah.
We really have to kind of stay in touch daily and see what tax changes are coming out from Washington.
There are a lot of foreclosures, short sales, and refis that went on this year with the economy and housing still getting back on track. How are taxes affected by that?
Well, that's a great question, and unfortunately it's affected so many people for 2010. So if you find yourself in that situation, you want to get some good advice. First of all, if it was your primary residence, so your primary home that you lost to foreclosure or perhaps a short sale, you're going to be getting a 1099, or you should have already gotten a 1099 from the bank showing the amount of debt that was forgiven. Now, there are certain tax breaks if it was your primary residence and the funds from that loan were used to buy the home or improve the home, you get a ticket out and you don't have to pay tax on that. Rental properties are a different story. If you've got a rental property that you had a short sale or debt forgiveness on, foreclosure, you may run into some problems there, so make sure you do some really good planning. If you haven't done any planning already, it might benefit you to think about doing an extension to give yourself a little extra time to take advantage of all of those breaks.
Is there ever a downside to doing an extension? Do you have to pay more or pay anything out?
You do have to pay your taxes that are due, so you want to do a short estimate to estimate what's due, because an extension of time to file is just that. It's not an extension of time to pay. So do a ballpark figure, send in your payment by the due date, which is April 18th this year. We get 3 extra days, and then give yourself plenty of time. That buys you 6 more months to prepare.
Talk to a lot of people these days who had to make a stock sale. Somebody lost a job, one of the partners lost a job, and they found themselves having to cash in company stock and stuff like that. It starts to get a little complicated with short-term losses and short-term gains, long-term losses, long-term gains. Should I go to a professional like that, or can I go to one of the online computer services and do it myself?
Definitely. If your taxes are complicated in any way, meaning you've got investments, real estate rental properties, or a business, you need some help, because there's hundreds of loopholes out there that you could be missing out on. Certified tax coaches are professionals that are specially trained to help you take advantage of all of those deductions. You can find one to work with in your neighborhood at certifiedtaxcoach.com. On the subject of stock sales, you're right, it can be a really sticky web, a tangled web of all kinds of laws. And unfortunately, most people in recent years have experienced a lot of losses, so that can be tricky. I view losses, though, as a tax asset. They can help your taxes in the future, so you want to make sure you do proper planning to make sure you don't miss out on that opportunity.
Well, Dominique, we really appreciate all the insight, and very important to make sure you sign those documents at the end. Some people forget that, right?
Yeah, don't forget to sign.
All right, thanks a lot.
Breaking the Tax Code is the name of her book. You want to check that out. For more tax tips from Dominique Molina, and for information about the book, go to kcal9.com and click on Seen on TV.